Varora and Kamal Ganga, and it has successfully restructured its balance sheet, and restructuring has reduced debt burden and enhanced liquidity. That's the reason it has a buy call on GMR Power.
All right. Thank you very much, Sud, for that. So GMR Power and two initiations. Always good to see newer, lesser covered companies getting into the fold of institutional coverage. And the other one, of course, is Aadhar Housing. Really well regarded name. Been growing the assets under management at about 20% like clockwork for many years. And the guidance I remember from the time of our IPO interaction is about 20% growth as well. So, stocks, I think in the pre-open already reacting a little bit, 3-4%. At this point, we got the first rates coming up in in a few seconds from now. The Nifty Bank, and some of the indices as well, and then we'll get down to individual names. So what do we have? About 25,300 plus back again on the Nifty, like yesterday. So it's a flat start, to be fair. The Sensex is also absolutely flat, 82,600 on the Sensex. So we saw some green, and very quickly the markets come back down a little bit. We've got, the IT index, which is absolutely flat as well. Bank Nifty at about 51,389, 390 is down about 50 points. Again, I mean, it's a very, very quiet, flat kind of start on the front line. Benchmark indices coming through. The heat map coming up on the Nifty. I mean, it's more mixed, certainly more mixed as compared to what we saw same time yesterday. I think there'll be about 20 down and about 30 stocks which are higher. So that is the overall picture, with about an 18-point cut on the index right now on the Nifty 50. Shirbi.
Okay, absolutely. Well, the stock that Sudarshan was just telling us about, GMR Power, with that BNK brokerage view coming in, that one's flying away 5% higher. And even Aadhar Housing Finance, the other brokerage note that Sudarshan picked out, doing really well, 5% on that stock as well. But anyway, to talk about the Nifty itself, it's extremely quiet. Bajaj Finance is cooling off after yesterday's run, about 0.5% lower. There's some selling in Bajaj Auto as well. LTI Mindtree, Infosys, Tech Mahindra, HCL Tech, all of IT starting off weak. So that's the first trend you can note. Then on the banking side as well, things are very listless. ICICI Bank is lower. SBI is down by about 0.2% thereabouts. So what's bringing up the upside? All of commodities, metals, commodities and oil and gas. So Hindalco about 0.7% higher. Coal India, ONGC. These are stocks on the upside. And there's TCS, which is a departure from the weak IT trend. All of IT is weak except TCS. But all things put together, extremely flat on the Nifty. So, Nigel, let's look at more interesting stuff.
Well, that's right. Your Orient Cement, that one's popped up and traded. It's up close to around 5%. Good volume burst is what we are seeing. Remember, in Friday's trading session as well, it did well. Yesterday, it came in for profit taking. Today, Orient Cement is up 5%. GMR Power's locked up 5% as we speak. So, good up move is what we're seeing out there. Zomato yesterday had a bit of a down day, but the street believes that maybe if it comes into the FNO list, it could make it to the Nifty. So for the time being, that stock is popping up. It's up close to around 1.5%. Geo Financial Services as well is continuing its good run. That's up close to around 1.5%. So a flat start is what we have. Vedanta is open mildly in the green because of the 20 rupee dividend that they have given. Also, the promoter entity has said that they'll be looking to buy back some of their bonds, which is good news. A stable promoter, something that the street likes. For the time being, though, the stock is just holding mildly in the green. Karnataka Bank is down 4%. I'm not sure what's going on here, but that's down close to around 4.5% as we speak. So that's one of the top losers from the FNO traded stocks. Just keep an eye out on that one. Prashant.
Yeah, so, you got absolutely flat rates on the index, 25,273 or so. But individually, I think I'm seeing a lot of defense names. So HAL is up 3%. HAL is the biggest volume-led gainer. It'll come up. That's Hindustan Aeronautics. Mazgaon Dock is up 4%. And that's a big one as well. Large volumes on all these. Cochin Shipyard is up 3%. So it's a bit of a defense move. Garden Reach is up 5%. So you got 3 shipbuilders and 1 plane maker. That is HAL. Which I mean, so it's a it's the Air Force and the Navy. Matrimony is up 10-11%. Matrimony, of course, we highlighted earlier on as well. And Nigel mentioned Orient Cement. Medi Assist, that block got done 2% higher now, 631 on top of yesterday's closing price. I just want to look at Aadhar Housing as well. Aadhar Housing is 5% higher, so that's good. 408 in Aadhar Housing Finance. As far as defense is concerned, Bharat Dynamics is another one, which is up about 3%. In Brigade, there is a QIP, which is up, and the stock's up about 3%, 1281 on Brigade at this point in time. I go down the list, volumes start to thin out quite a bit. Signature, that is the Gurgaon-based real estate company, that is down about 4.5%. And I think there's a large sort of block which has happened there. Ola Electric is down 1.6, 1.7%. Stocks down about at about 113. High was 156 post-listing. There is Gujarat Gas, which is down 1%. Gujarat Gas had a phenomenal move last week. And there are names like Policy Bazaar, which are down about 2% or so as well. So yeah, that's essentially what is up and down.
Just one more to the list, Prashant, and that's Zomato. CLSA impact here, because CLSA has put out a buy call and the target price is about 353. Quite a few brokers have targets northwards of 300 on Zomato. Big volumes today as well as we start off.
Well, one more, Tilak Nagar Industries, we had highlighted that yesterday it moved with very, very large volumes. It's made a fresh 52-week high today, ahead of that implementation of the liquor policy in Andhra Pradesh that the street has been waiting for. I think it takes place on October 1st. So that's another one, making fresh 52-week high.
Close eye, Nigel, on alcohol.
No, actually, in every state.
Actually, when it was implemented in UP, the branded sales went up by 3 times. So I think the street is trying to factor in, but let's see whether it actually gets implemented.
Absolutely. Yeah. Absolutely. Well, flat on the indices, 6-point change, 3-point change, 25,270 is where we are at. We have Krishna Sangvi now joining us. He's a market master today, CIO equities at Mahindra Manulife Investment Management. He's with us here on studios. Krishna, great to have you with us here. Thanks very much. I mean, things are continuing to not aggressively move higher, but I mean, the up move continues and the up move is extended even as we speak. In the past couple of times that you've been here, you've sounded a bit sort of a little defensive, right? Maybe things are getting a little excessive, but there's no telling how far it can stretch, right? In this current leg. What are your fresh thoughts on what we're seeing out there? Yesterday, we heard some comments from SEBI on the SME IPO approval process, and that has been such a big area of wealth creation and so much activity, so many listings, etc. Sometimes you get these signs from, it's not a direct kind of a sign, but you get this kind of regulatory talk. We've seen this over past cycles as well. Are we at that stage where people are starting to sit up, actually speak about what's happening, expressing worries, and that perhaps hits sentiment somewhere at the margin?
Yeah, sure, Prashant. I think you're right. Broadly, we've been cautious for some time, and in a way, no. If you look at India as an equity market, which is a play on Indian economy, etc., I think there is structurally reason to be bullish on India as an equity asset class. What's the worry can be more on relative valuations across sectors, across market capitalization. So that's been one area where, yes, clearly a worry was that, worry is also that, a lot of small caps, maybe micro caps, possibly mid caps are, a bit, let's say, on a valuation wise stretch right now for what earning potential they have over next couple of years. And not every stock you can discount, 27 and 29 and 31 earnings, because it's honestly too far, to cite. So what's happening right now? I'm not ignoring. I'm actually, saying SME on is something we don't really track as an institution. Yeah. So I'll possibly ignore that. So if you really sit back and think, yeah, fundamentals are good. What's clearly happening is a surge of liquidity, and the surge pricing is what we are used to in our thing. And maybe that's a time. You figure out there are some times of the day where the pricing for the same route journey is much higher than otherwise. So possibly, yeah, today is a time somebody really wants to buy equities. Willingness to pay that higher valuation is in a way indication of surge. If somebody can sit back and say, okay, I don't want to participate because I'm already invested well enough and the incremental money is not something I want to put to work today, is great. But somebody who's under-invested might still have that feeling that even if it's a beginning of journey for myself, so why not start today? I think that's one way to look at investor profile. If you look from a pure market side, yeah, clearly earnings are reasonably okay. Not every sector is going to grow at same time, and that's the beauty of sector rotation or profit pool participation of economy. That will play out. And the last part of let's market moves on what? Fundamentals, liquidity, and sentiments, right? So broadly, I mentioned fundamentals, good, liquidity, surge pricing maybe. Third part is sentiment, and sentiment is clearly something coming outside India. Exactly a month back, we all would have possibly spent enough time discussing what can happen to yen carry trade, etc. Now come back today, maybe first week of August and first week of September, more or less, a lot of markets are higher than what they were Possibly yen is very much same as what it was before that appreciation started.
Yeah.
So those short-term moves honestly are difficult. That's a sentiment, and what you mentioned about markets being expensive, not willing to give up, I think it's true worldwide. Almost every market you track globally has the same phenomenon, and that's a sentiment. I really don't know what can change.
Which is why I want to go back to the surge pricing example that you made, Krishna. The thing is, when you have to go to office every morning, you have to get into that cab. Surge, no surge. The only thing you can do is maybe choose your route a little wisely and decide whether you want to go down A road or B road or toll road or non-toll road, right? So the analogy here being that I think investors have realized that for long-term wealth creation, you've got to be in the market.
Yep.
That lesson has been well learned, I think, COVID onwards. So now help out someone who needs to come in and start deploying money fresh. See, it's very easy, like the day, election result volatility day, when you get the dips, people come in and buy. And we've seen that with mutual funds, right? The hard part is to decide on the route when you know you have to pay the surge because you have to go to office. So then help us navigate the route in terms of what to buy, portfolio construction.
Actually, I can't obviously deny the fact that we all need to go to office at a particular time. There's nothing much options.
No work from home?
No work from home.
At least not
You
for
have
us.
to get on the surge. If you get lucky, suddenly surge drops, you get very lucky and you get a great price at a good bargain. But otherwise, surge is the way to go these days.
So as long as you're willing to pay for that valuation, it's broadly okay, is what investors should be able to appreciate. And when you're paying for higher valuation, honestly, the real risk is, will you get an exit from the same stock at a similar multiple, or your earning growth might be offset by the valuation compression because you surge pricing, then you have to either wait for the next set of surge pricing to get off that particular stock in terms of valuation, or you say, okay, because the growth is so good, even if I lose something on valuation front, I'm still going to make absolute money for myself. And I think that's one way to look at it. Other way to look at it is really, yes, is there an alternate option, which is alternate market cap segment, which is large cap, mid cap, small cap, let's say choice, or you figure out a little bit maybe sector wise.
Yeah, so that's what, if you could help with the sectors.
Yeah, sure. So I think market cap wise, perhaps large cap remains better. I think sector wise, it's a little bit tricky right now because what's really playing out is, financial, which has had the best, let's say, earning profile of last couple of years, is possibly having its issues coming up more from ownership. Reasonably well-owned stocks, heavy ownership in the index. So to that extent, that's something very tricky in the sense that earnings are in place. Maybe ownership is hurting. At the same time, Indian economy is opening up. Where this entire thing about China plus one is playing out everywhere in the system. You have a nice situation where a lot of new companies are opening up, which possibly were not the situation in India 2 and 5 years back, because this entire China plus one thought process, PLI as a category has really opened up new businesses which we've not seen. I mean, nobody would have seen some of those EMS kind of names, or today anything in India you look at PLI is so over encompassing that you have a ready demand being already met by some import. All you got to do is make it in India. You don't have to worry about a customer. You just have to figure out how to produce it in India in the quickest possible time, because there is a PLI structure. So that's a little bit tricky. On valuation, I said yes, but I think on a macro piece, yeah, there is something which is, maybe telecom has emerged as a new sector. Possibly, I think you look at it, FMCG, consumer staples, that's something which is likely to do well because you got a nice rural, recovery expected on the earnings side. And yeah, clearly, if you want, power is another sector which is still looking good. Maybe core economic sectors.
So financials, telecom, FMCG.
Yeah, and core economic sectors, I guess, power is one, oil and gas, metals as a pack, because these are the enablers which will take us to that, make in India journey all over it.
Right. All right. Krishna, when you spoke about that yen carry trade and everyone forgot about it, I recall, speaking to someone who's more trader mindset, and they said, Nigel, good coverage on the yen today, but I'll tell you what, the flows are so strong and the buoyancy so much in the Indian markets that people will only be focusing on making rupiah. And that seems to have played out because the markets are up 1,000 points in the last,
That's right.
1 month or so from those lows that we saw. I wanted to ask you about two themes. One is railways and defense. Valuations seem to have gone out of whack. The opportunity is large, but how much of the good news has played out? And do you all recommend getting in still at these levels?
Yeah, sure. So I think same thing. If somebody is willing to pay for earnings which are 2 and 3 years down the line, it's okay. Otherwise, if you look at next couple of years, I think a lot of these earnings are priced in. Another thing which drives this sector really is the order book, and that order book accretion in a way continues. But now they have reached a stage where the current order book is anyway sizable, so one did not worry about order book visibility beyond a number is my sense.
But at current reckoning, what would you do? I mean, someone who has a longer time frame, maybe 3-4 years, as you mentioned, it's okay. For the time being, will you wait for a better entry opportunity in railways and defense?
Yeah, sure. I think, yeah, you're right. Prefer to wait for a better entry point, considering the kind of run-up, etc. we've had, yeah.
Okay. What's the sense that you're getting just in terms of valuation? Some of the newer listings, that's where the, Prashant started off by asking about this. That's where there's a lot of chatter. And I'm not talking about the SME board because, you as institutions wouldn't look at that. But even in terms of some of the high-profile IPOs that have come to the market, Ola, for instance, there's a lot of anticipation around Swiggy. There are smaller companies that are coming. I mean, there's a microfinance listing that will probably happen soon. What's your overall thought? I mean, have you been participating just pre, post? How do you look at some of the new paper that's come to the market?
Sure. I think as economy is growing, markets giving a lot of opportunities to buy. So in a way, we do participate in all those new IPOs wherever we find attractiveness on valuation stroke, the business opportunity. So that's not a challenge. The only area where one looks at it, IPOs are coming in two categories. One is new set of companies, which possibly, there is no parallel in India in the past, available names. And other set is, existing companies which they have their own available reference points as a benchmark peers. So it's slightly difficult to really, evaluate absolute new set of companies because there's no reference benchmark. And that's what, a lot of market participants are focused on that area because that's a new opportunity. The kind of growth one may get there is reasonably, different, and plus little bit narrative helps there, yeah.
It's a pleasure, Krishna. Appreciate you joining in, and thank you very much for being with us here on CNBC-TV18 with all of that perspective. Lovely chat as always, and we'll remember that surge pricing. We'll reassess that next time you're here. Thanks indeed. Well, the market's not going anywhere, so you don't have to worry too much about that. We're down about 7 points. Market breadth is positive. I think with about 15 minutes in, 1,600 stocks are up and about 700 stocks are lower. And defense really is, what is doing the best. HAL, Mazgaon, Garden Reach, BDL, that is Bharat Dynamics, and a bunch of other names as well, looking very, very good at this point in time. So, yeah, I mean, there is enough action. As far as individual names are concerned, indices absolutely flat, guys.
All right, well, let's focus on Bajaj Auto then. The stock has seen a good run in the last month or so. It's sitting at record highs. The August sales as well was strong. So let's find out how things are shaping up. To help us out with that, we have Mr. Rakesh Sharma, the ED at Bajaj Auto, who joins us on the show. Hi, Mr. Sharma. Good morning and thanks a lot for joining in. Give us an update on how's the export situation. Are things improving? And in particular, Nigeria, you have told us in the past that it was, I think, 15,000, 20,000 odd, still far away from the peak of 50,000. What's the recent update?
Good morning. Yes,
morning.
The exports business had a little bit of an uptick. And particularly retails in Nigeria after a very long time touched 20,000 units for us because they were around 13 to 15,000, 16,000. And this is a very good sign because the larger retailers and wholesalers started to buy in. And hopefully we will see an improvement further improvement in retail sales going forward in Nigeria.
Mr. Sharma, hi, sir. Good morning. So, can you tell us what would you project or want to see as a sustainable, steady monthly run rate in Nigeria? I mean, you've been clocking between 1,30,000 to, in good months like this one, almost 1,43,000, 44,000. So, say by the end of the year, by the end of the fiscal, what will be the steady state run rate for the business here, monthly run rate?
Well, it's very hazardous in this kind of a volatile situation to give you very precise numbers. I can only say that there has been an improvement. We are very confident that there will be a continued improvement as we go down the year. And last month in Nigeria was a very good sign. So we are expecting the same kind of a thing to continue with a little bit of an improvement. It's the slope of the curve which one is uncertain about. I think the direction is upwards, but the slope is what is uncertain, barring, any new bombs which explode.
Sure. Okay, so let's talk about stuff that's not nearly as hazardous. And here I'm talking about hybrids, a segment that Mr. Rajiv Bajaj, in his last conversation with us, he was extremely bullish on the segment, right? And I just want to know, so how is Freedom 125 doing? I think this has been the first full month, right? Deliveries, I believe, started. So what's the uptick and what are the expectations here?
Well, we've had an outstanding response, as you probably would also know. By the end of August, we had covered about 33% of the addressable market. When I say addressable market, it is, largely the 100 to 125cc segment, which is about 75% of the two-wheeler industry, and the percentage covered by the CNG network. That is what we regard as the addressable market. So we had covered 33% of that. The dispatches were about, into 6 states, were about 9,000 units. And we have retailed about 5,500 of those. We've got about 12 to 13,000 paid bookings as I speak. And the more importantly, the feedback from the customers and from the dealers is very, very positive. People have widely appreciated the biofuel nature. The CNG, while the CNG is dramatically reducing, halving the
Right.
fuel
Mr.
cost,
Sharma,
just a minute. The gasoline is providing them the reassurance, and that has played back very well.
Okay. Good morning, sir. So just to get those numbers, you said 5,000 bikes sold, 12 to 13,000 bookings. Those are right. And you said 33% of the addressable, you've addressed the, what was that figure, sir? We could just explain.
33% of the addressable market had been addressed in August because, it's a phased rollout. By end of September, we would be in 80% of the addressable market. Addressable market is...
You mean 33% of your network has been, these bikes are now available. That's what you mean?
Yeah, 33% of the market which is addressable, which means, as I was saying, that all those markets which are served by the CNG gas distribution network.
I see.
So we have covered 33% of that. And by September, given the, confidence which, the teams are experiencing, the dealers are experiencing, and the adoption by the customers, we should be able to address about 80% of that by end of September.
So,
and the production capacity, I think you had said was 10,000 units a month initially, which is expected to go up, right? By the end of the year, you had said 30 to 40,000. Could you give us a sense, are those the run rates the same as it guided earlier, or has there been any change? What should we expect?
Yes, so 10,000 is what we have begun with. But next month, hopefully, we should be able to ramp that up to 20,000. And then as we move into January, in a phased manner, it should be going up to 50,000 units. And you see, this is...
And in terms of monthly retail sales, sir, on a run rate basis, what should we expect over the next many months?
See, this is a rising curve. It's not an easy question to answer that what precisely would be the rate. But you
roughly,
can imagine
sir.
But as the addressable market is reached and product is supplied, I think we are quite, we expect sales to, for example, double in September because that's a very near-term view. And then let's see how it goes in October, November, December. But like I said, we are preparing for a 50,000 unit capacity. And obviously, we want to reach that capacity. But precisely exactly how each month will unfold, there is a season in the middle, and then aftermath of the season is always a bit subdued. We will see how it goes. But I can say that from now to January, we should be aiming towards a 50,000 mark.
So I'll tell you, sir, I'll tell you why we're focusing so much on the Freedom numbers, because when Parikshit was speaking to Mr. Bajaj, he put out a target saying, you know, a sales run rate of 40,000 by January. So now you're saying capacity will go up to 50,000. So we were just trying to gauge whether the teams are aligned and they can deliver on that target that he's outlined for January. Monthly sales, I think, of 40,000. But anyway, let's focus on the rest of the portfolio as well.
Is that what you're trying to do? Trying to see what whether both of us are saying the same thing?
No, you will. I'm sure, but you know, you don't know. Sometimes the big boss says a number, so we're just trying to understand if the teams are aligned and they can deliver on that number or not. That's basically what we were trying to get at.
Well, I would I would say that it is important for your viewers to know. I don't think it's as important to try and see if there is some light between cracks and all that. But what's important for your viewers to know, people who have stake in Bajaj Auto, that the capacities are being ramped up to 50,000. We have retailed 5,000 last month. We expect to double it. And hopefully the retails will move in the direction of the capacity which is being put forward. And let's see how it unfolds. That's what the bottom is.
Just to close the loop on this, Mr. Sharma, you said 50,000 per month sales possible by March of next year, right? Of Freedom 125.
I think you guys are asking too many questions driven by different objectives. Let me just, for the sake of viewers, explain and give me a minute for this, okay?
Yeah.
So right now we are in 33% of the market. Next month we will be in 82% of the market. Right now our capacity is 10,000. We invoiced, we wholesaled 9,000. We retailed 5,000. Next month we will improve our capacity to 20,000. And hopefully we are retails, which already we have bookings of 12,000 units, 12 to 13,000 units. So hopefully the retails will go up from 5,000 to 10, 12,000. We are expecting this run rate to continue to go upwards. So therefore we are putting in capacity. That capacity in a phased manner will go towards, go to about 50,000 units in January. And we expect sales to move in the same direction. Now, exactly whether it is 40,000 or 50,000 is difficult to say. So in quarter four, we expect, we are preparing for 50,000 units. We expect the sales to be around 40,000 units or so. That's what the thinking is.
No, absolutely. And we're not holding you to 40 or 50. I mean, as you said, right? I mean, this is, dynamics in the market, lots of things. But we get a sense. But this is going to be substantial, right? Because your average sort of monthly volumes over the last 12 months are about 370,000 a month. And so this is going to be substantial by very, very chunky, right? How should we look at this? I mean, your market share in this 125 segment which has already increased quite a bit, has improved over the last many years. This grows substantially?
Yes, there will be a dramatic impact on the market share because of this, because a lot of the first information which we are getting is that the first movers to Freedom 125 are from the 125cc segment considerers. So there is the 110 to 125cc intenders. And therefore, and a lot of this is incremental. It is coming, as you know, our own share in the 100cc is lower, though we have a much better share in 125cc. But in the entry level 125cc, we don't have a good share. So therefore, a large part of this is incremental. Now, having said all this, I just want to say that a lot of this trajectory is dependent on the unfolding customer experience, which will be delivered by the gas distribution companies at the pumps. Because, on one hand is the savings which the customer is experiencing and all the other benefits of comfort and having pride of ownership in this vehicle. But on the other hand is the experience one gets when one goes to fill in the CNG. And therefore, it is not very easy to arithmetically extrapolate because the customer is going to weigh the benefits, which I just said, and then also look at the experience they get at the gas distribution companies. Of course, we are working with gas distribution companies, and I must say they've been very, very supportive to try and improve the experience which a two-wheeler owner gets when he wheels in his CNG bike Freedom into this station. But in the end, we have to see how these two things pan out. And that is the big ambiguity in all this, which is making extrapolation, a little bit of an art and science.
Okay. All right, Mr. Sharma, appreciate you joining in. Quite a few positives coming away from that quick interview that we just had. You're talking about exports improving, Nigeria's improved, CNG capacity moving up. Hopefully sales keep in tandem. And I was looking at a Jeffrey's note which suggests that your market share has improved in the EV vertical, which you sounded very optimistic about the last time we chatted. Appreciate you joining in, Mr. Sharma. Wishing you all the best and looking forward to having a chat with you in the coming weeks. For the time being, though, we'll slip into a short break. On the other side, we'll get chatting with Mr. Girish Koski, the MD and CEO of PNB Housing Finance. You don't want to miss this.
Welcome back. Well, we have another company on the radar and another guest with us in the studios. Girish Koski, MD and CEO of PNB Housing Finance, is here with us to talk about the company's business outlook. Mr. Koski, thank you so much for joining in and being with us here in the studios. Really appreciate it. So let's start with the growth trends, because there's been a lot of buzz around the PMAY 2.0. In the last quarter, the first quarter, I think the AUM growth was about 7% if I look at it year on year. So given that we have the new format of the Pradhan Mantri Awas Yojana, what does that mean for business and what kind of growth will you look at this year?
Good morning. Thanks for having me here. I think since last 2 years, our focus has been on retail. So we should talk about retail growth. Last year, the retail growth was 14.1% amid so many challenges. Now we are behind all of those challenges. And this year, the guidance on retail growth is 17%. Corporate book, which was 18,000 crores, now it is down to 1,800 crores. So if you look at overall book, corporate degrowth also would impact the growth, and therefore 7 is not the one what we should be tracking. We should be tracking 14.1 last year retail growth. This year it's going to be 17%. With PMAY, I think big announcements are made, 10 lakh crore investment in housing. And PMAY, if you look at last two terms, the total amount spent was 1,65,000 crores, even though the allocation was 2 lakh crore. And this time, that amount itself for one term is 2,30,000 crores. So it's going to be big. We are waiting for the final details. I think PMAY is going to be big. It's going to help us on three counts. One, in terms of showing better growth. Number two, it's going to, we expect that it's going to improve the margin. And number three, the cost is going to reduce.
All right. Hi, Mr. Koski, and welcome to the studio. Good to have you here. Tell us about your NIMs then. I think it's holding around the 3.5, 3.6% odd. How is the cost of borrowing shaping up? From NHB, what is your current mix, current amount of money you're getting from them? And how does that change going ahead? What does it mean for your NIMs from here on?
So I think we have guided NIM of 3.5%. So I think for last few quarters, we are holding at about 3.65. So we will see NIM for next 2 to 3 quarters, it will be at the same level.
Okay.
And after that, it will start slowly inching up. The reason is that we are changing segments within retail. We are moving towards more higher yielding segments like affordable and emerging. Affordable, we started 2 years back. Now the book is over 2,500 crores. It comes at a higher yield and therefore better margins. Emerging vertical, we started this year.
Okay.
So after 3 quarters, NIMs will start inching up. Till 3 quarters, we'll be able to maintain at the current level, number one.
Okay.
Number two, in terms of NHB, because of our improved financial performance, we had access to funds last year, 3,000 crores. Obviously, this year we're expecting a higher allocation from NHB. And today, if you look at our entire liability book, NHB is about 8.5%.
Okay.
And this will go.
Give us a couple of numbers then. You said affordable and emerging, both of them are the focus areas, right? Which gives you better yield. Affordable, you said, I think it's around 2,500 odd. Where do you see this number head, say, in the next 3-4 years from here on? You must be having a target. And an emerging segment as well. What is it and where is it headed?
Okay. On affordable, our plan is to get to close to 5,000 crores this year end.
Okay.
And by FY27, affordable book is going to go to 15,000 crores.
Okay.
So now it is 2,500,
5,000.
year end 5,000, FY27, 15,000 crores. That's our plan. On the emerging, the book will be 25,000 crores by FY27. Today, the book is around 12,000 crores.
Okay.
And if you look at quarter one, almost about 33% of the incremental sourcing came from affordable and emerging. These two would come at a higher yield. The plan is to take it to 40 to 42% by this year end.
Okay. By this year end, so affordable and emerging segments will be 40 to 45% of your book.
40 to 42.
42% by the end of this year.
What is the number for emerging, sir, you said, by 27?
25,000 crores.
25,000.
So the plan is that by FY27, the retail book is going to be 1 lakh crore. Out of 1 lakh crore, affordable will be 15,000 crores, emerging will be 25,000 crores, and the balance 60,000 crores will be prime.
Got it. Now, just to press you on the margins a little bit, cost of funds are moving up, right, across the board?
Yeah.
Where are we at? I mean, is it, are we in the initial stages where, and we will see upward pressure? Because, bank credit itself is going to be lower this year as compared to last year. So obviously, I mean, the pool of your funding, I mean, I'm not talking about you as such, but NBFCs, and 60-65% comes from banks. So that also, there's lesser water in the lake in that sense. You'd agree with that?
See, if you look at, let's say, about year and a half back, I think market borrowings, when I say market borrowings, I'm talking about CP and NCDs, were at a slightly higher rate. Now, that has eased out. So NCD the rates have dropped. CP is very attractive, right? And if you look at a bank loan, it's about 40%. So in last 5 quarters, if you see at the industry level, housing finance companies, the cost has gone up by 170 bips. For us, it has gone up by 92 bips. And we have been able to kind of maintain. Today, our cost of borrowing is 7.92%. And incremental is 7.75. So there won't be much of increase from now. We'll be able to maintain this. That is because the company is doing well. We have access to multiple sources of funds. NHB is one, CP, NCD, right? And also, in quarter 4 of last year and quarter 1 of this year, we got a rating upgrade from all the 4 agencies, CRISIL, ICRA, CARE and India Ratings. So all of these things have helped PNB Housing. But the point is, yes, the cost is inching up. And bank credit may not be a challenge. The cost of bank rate could be a challenge, I think, for the industry.
But you're maintaining your NIM guidance
We-
at 3.65.
Our guidance is 3.5, so
3.5.
we'll be around 3.5 plus, for next 3 quarters.
How much of your book, sir, is fixed and how much of it is floating?
On the entire
I'm
book,
asking you this because, we are bracing for rate cuts. So, that could have an impact as well. So, how do you see that panning out?
see, our almost about 100% is floating.
Oh.
So it's not fixed. I think this would be true for, I think, most of the companies. No, for us, you're right. So for us, when there is a rate cut,
Yeah.
obviously it impacts the entire industry, but it's only a lag effect because your assets are completely floating, whereas your liabilities will have a mix of floating and fixed, right? And therefore, there'll be a lag in terms of managing this piece. You have to reprice your assets much faster than your liability, getting repriced.
Yeah.
So this gap is there. For us, there are few things. One, because of rating upgrade, we will be able to get loans at a better rates from all the sources, number one. Number two, we are very slowly increasing our share in high yielding segments.
Yes.
Number three, we are going to start corporate finance in next few months. So all of these things are going to help us. So for us, the pain could be there, but could be much lower during that lag period.
Just to go back to the point, since retail is such a big focus, and you said that 1 lakh crore would be the size of the book by FY27.
Yeah.
FY27. Now, in this piece, to go back to the central government scheme, what is the role of PMAY? Because we were getting feedback from some analysts as well, and they were pointing out that the 2.0 version is actually not that beneficial because it's tweaked some definitions, and I think now the middle income segment definition has come down to 9 lakhs, etc. So what is the exposure that you have to PMAY 1.0, and do you expect any incremental benefit from the second version of the scheme?
See, in last 2 terms, we had disbursed 62,000 customers.
Okay.
Amount was about 13,000 crores.
Okay.
Right now, in this PMAY 2, they have tweaked the income levels. I can understand the loan ticket size, all of those things. There has been a tweak. That is to only ensure that the benefit really goes to EWS and LIG. Now, most of the companies which are focusing on affordable and emerging will tend to gain.
Right.
As I mentioned to you, I think the scheme details are still not out, but we expect that it's going to help on 3 counts: 1 in terms of growth, 2 in terms of cost, 3 in terms of margins.
So as a percentage of your book, you said the disbursement amount was 13,000 crores, right?
Yeah.
In the first scheme.
First 2.
In the first 2. So what is it as a percentage of the book now, and how much do you expect it to grow up to? Since you're expecting it to be beneficial?
I would be able to answer this question once we know the scheme details, because we know it's going to be big. We are still awaiting for the finer details. But definitely one thing I can tell you, it is going to be really big, because the allocation is such that it has to be big, and there is more focus this time on PMAY.
And credit costs will be virtually zero, right, for the year?
The credit cost for this year, we have guided 25 bips.
25 bips.
But we also have a right back opportunity both from retail and corporate. So
that's
yeah.
Absolutely. Thank you very much, sir, and thank you for dropping by to our studios. Good
Thank
luck
you.
to you, to your
Thank
team,
you.
as you continue to execute well over the next many quarters. Well, let's move on, and we have the management of Kaynes Technology, which is on our radar. The cabinet has approved the proposal of Kaynes Semicon to set up a semiconductor unit in Sanand, Gujarat. This is about 3,300 crore chip assembly plant, to be specific. What are the plans here? What would the revenue potential be? We have the managing director and promoter, Mr. Ramesh Kuninan, and the company's whole-time director and CFO, Jairam Sampath, joining in. Gentlemen, great to have both of you here. Appreciate your time. Rameshji, if I can start by asking you, congratulations first up on the approval. I think we've spoken about this in the past, and you at that point said that you were awaiting government approval, and that nod has now come through. So tell us, this is a packaging unit, right? I mean, sort of testing and OSAT facility, testing and packaging facility. When do you sort of...
It is a OSAT packaging facility and test facility.
Okay, got that. So what are the timelines here? When will this be up and running? What is the investment? What is the overall revenue potential from this? And what are margins going to be like?
We have done all our planning stage. We have acquired the land. So we should be able to quickly start the construction activity. Construction will take a year's time. And on the third quarter of 26, we are expecting production to start. We have lined up with various companies for starting the business. And this is where we are.
Got it.
Q3 of FY26 production will start from this plant.
Yes.
What is the revenue potential and what are margins in this business going to be, sir?
Yeah. So revenue potential in this, typically this is an asset-intensive business. So for every rupee of asset capex on a gross basis, you get about 1 to 1.5 rupee of sales. So in a full-fledged manner, when this entire project is implemented, we would probably have about 4,000 plus crores of revenues coming in. In terms of margins, we've, I think from beginning itself, focused our capex on more on the advanced packaging area. So that's what is the more remunerative area. So about 25% of the capex is aimed at the legacy packaging, which is typically available in South Asia and all that. Whereas the 75% of capex is aimed towards advanced packaging, which is more the province of Taiwanese and Japanese and Americans. So we conceive of a world which have more requirement for advanced packaging, and also we don't want to be just another mass OSAT player. We want to be an integrated EX player with play in advanced packaging, which is what we expect will have a good demand going forward.
Okay.
Mr. Sampath, so if you can give us a number, what are margins then? 75% towards new packaging, only 25% on the legacy side. So obviously better margins, right? Could you give us some sense of the numbers?
Yeah. So at this stage, all we can say is that it will be margin accretive to the current business. So whatever, let's say 15% EBITDA that happens in the ESTM business, these businesses eventually will have more than that kind of an EBITDA, obviously because of that intensity. And we endeavor to make similar ROCs too, by making sure that we do more of advanced packaging work.
All right. Hi, good morning, gentlemen. Congratulations on this development. A quick couple of numbers. 3,300 crores is the total investment, but the outflow from Kaynes will be around 800 crores, 25% of the total mix, because central and state governments as well will be putting in. Is that a fair number to work with?
Yes, you are right.
All right, 800 crores. So that's the investment that's going out of y'all. Now, you said that the peak revenue potential will be around 4,000 crores. I'm reading a couple of sales notes that say that by 2030, they are working with a number of close to 3,500 crores of sales with high teen margins. They're referring to 18 to 20%. Is that doable at current reckoning?
Yeah, so at this point in time, very speculative in nature because we've not put the first machines on the ground, but the plan is to get superior to the existing company's margins.
Yes.
Because the asset intensity is much higher. So whatever is the current ROC, we want to target that ROC. So whatever is the required margins for that, I think will be delivered. So that's why moved the capex more towards the advanced packaging, which is more remunerative.
Got it. And you're going to be commissioning it in third quarter of FY26. I believe it takes 2 to 3 years to reach optimum levels. So by FY29, we should see that optimum level. Would that be a fair estimate?
Yeah, FY29, FY30. We'd like it to be earlier, but it's a new territory. So we are a little guarded here. But I think we will gain more confidence once we have the first product out of door. And so we are looking forward to completing the POCs this year, FY25 May. I think along with construction will also get completed. Next year, we have a couple of quarters to kind of get the POC approvals and so on. And like Rameshji said, the commercial production starts off in third quarter. And fourth quarter, we'll have significant revenues, maybe 200 crores plus kind of revenues. And of course, FY27-28 will ramp up the production. And by FY30, we probably reach the potential for this level of investment that has happened.
Sir, just to clarify on the point, you said that the peak revenue potential is 4,000 crores. So is that the annual run rate that you're talking about at peak capacity when you're operating at 100%?
We don't operate at 100% technically, right? So generally about 80% plus. So 80% plus can deliver up to about 4,000 crores. It entirely depends on what kind of work we do. So, but typically the asset turns in this business of about 1 to 1.5. So we're hoping to kind of set up our businesses and our portfolio of customers in such a way that we get a slightly better run rate on the asset turns. So considering that about 3,300 crores of assets, so we think that we can do about 4,000 crores at about, it's 85% capacity utilization.
Got it. Jairam, just one last briefly, if you can respond to this. The Hyderabad smart meter facility is also started, right? What is the potential here on the revenue side?
So this smart meter facility was inaugurated last month, and I think we would do about 3.5 to 4 million units of smart meters per annum to begin with. And we will add capacities. These are fungible capacities. We could do typical EMS business too. So we would add some more capacities depending on how fast we have to execute these smart meter orders, which are right now coming at a fast clip. So we hope that the second factory also will start off shortly in the same location.
And by FY26, the number the street is working with is around 800 crores from this facility for smart meters. Doable?
Yes, it is doable.
Yes.
Oh, we appreciate it, you gentlemen joining in. Congratulations. The market likes what you're saying. And as we speak, the stock has moved to the high point of the day. Thanks a lot for joining and giving us an insight on this recent development as well as on the smart meter facility. Well, let's get back to the markets. But before we that, I think we had the new listing, Premier Energy. I think that was a new listing that came up for you on the screen. And as of now, you have a big listing bonanza that's taken place, a double in comparison to the IPO price. So whoever got allotted will be quite happy. Let's get in Nagraj Sethi as well, technical research analyst at HDFC Securities. Hi, Nagraj. Good to see you in. What's your view on the initial trade today? And fill us in with a couple of your ideas.
Hi, good morning, Nigel. Market has been in a constant uprun over the last 12-13 sessions. Quite a bit slow uprun, we can say, and going into a new all-time highs. Currently placed at the hurdle around 25,300, 350 levels. I'm not expecting a bigger decline from here onwards, though it has placed at the higher levels. Still, there is no indication of any significant reversal pattern building at the higher levels. There may be some consolidation or a small dip towards 25,000 is going to be the support, immediate support for this. And I'm expecting any consolidation and dips is going to be a buying opportunity. Once it takes away the immediate hurdle of around 25,400 levels, I'm expecting Nifty to reach towards the next upside target of around 25,800 odd levels. Right now, mid cap and small caps are consolidating. They are gradually bouncing back from the lower levels. I have two stocks from the segment, and the first one is the railway stock, RVNL. If you look at the chart of the railway stock, RVNL, it has been in a continuous range-bound action over the last couple of months. Recently made an attempt to move above the immediate resistance of downsloping trend line, currently consolidating, placed at the support, currently trading around 601, 602. One can look to buy at these levels, and the upside target would be 640, and one can place a stop loss around the 575. And second one is Prism Johnson. Chartically, Prism Johnson has been in a consolidation phase. A large accumulation was taking place over the last couple of months. Recently, after a small downward correction, it has bounced back in today's session. Overall chart pattern is looking positive. Currently trading around 171, 171.50. One can look to buy at this point of time. 183 is going to be the target, and one can place a stop loss at 166.
Okay, all right, got that. Thanks very much, Nagraj, for getting us the details. The stock of the morning really has to be the new kid on the block, the new listing. Look at Premier Energies and the kind of volumes this, the shares are doing right now. Over, I think, over 2.5 crore shares trading. The pop is over 90%, 90 to 95%. That's the new listing. It's a company that's engaged in the business of, solar cells, solar modules and whatnot. And of course, lots of excitement around the IPO. So that's a big one, big listing of the day. We'll take a break, come back on the other side with a roundup of all the commodity market action and the cues. Manisha joins in with the latest. Welcome back. Well, let's get to all the commodity market action. As promised, we have Manisha joining in with the latest. Manisha, so what's top of mind for you today?
Well, I'm doing some number crunching right now, Surbi, and while we have seen commodity markets continue to be very volatile, and it is also showing on the exchanges now in sense of volumes. So as per a latest SEBI report, it shows that when you look at the turnover on exchanges for the month of July, and this is on a month-on-month basis, you have seen a 23% of a surge come in here. So the month of July actually just shows yet another month where we are looking at volumes continuing to grow, more and more people trading and hedging when it comes to commodity derivatives. Well, this is what we've done in sense of various exchanges in sense of volumes growth in the last 1 month. When you look at MCX, it has seen a 23% of a jump. NCDX, which majorly does agriculture commodities, also has seen volumes and turnover increase. NSE also seems to be coming quite strong when it comes to commodities, and we've seen 29% of increase in volumes here as well. BSE is the only exchange in all of those 4 exchanges which hasn't done really well in case of commodities, and we've seen yet another 7.5% of a decline for the month of July as well. So overall, when you look at the market share as well, it continues to be MCX which is holding the lion's share here with 98% of volumes happening on this exchange. NSE does a 1.7% and NCDX an even smaller, less than 0.5% in sense of overall market share there. Also, when you look at overall futures and options, while futures is what the commodity derivative started with, but options trading seems to be looking at a larger chunk here with 87% of overall volumes here. Interestingly, even as foreign portfolio investors are now allowed in commodity derivatives in the Indian markets, and of course, SEBI has been doing various things, easing markets in that sense, but we haven't seen volumes from here go. Remember, when it comes to commodities, still is majorly retail participation that we see in the markets here. Well, the reason for that is that the Indian derives prices from global markets, and then when it comes to India, there also is foreign exchange risk, regulatory risk as well. We have seen various agriculture commodities still in suspension till the month of December. And then the cost of derivative trading in India is much higher than what you have seen in the global markets, is the reason not too many foreign participants actually look at India when it comes to commodity hedging there.
Okay, all right, Manisha, got that. Thank you very much for joining in and sharing perspective on this. We'll take a quick break, but coming up on the other side, Lata will be in conversation with Bhaskar Lakshminarayan, CIO and Head Investment Management Asia at Julius Baer, for some market perspective.
Welcome to It's the Economy. India is going through its longest streaks of positive closings. 12 in a row, and let's see how things pan out today if it's 13 in a row. Now, does India still remain attractive despite these high valuations, especially of the last 2 weeks? How crucial are the August employment numbers from the US? Can they derail the rally in both countries? In fact, the global rally. To get a 360-degree perspective of the global macros and the preferences of global investors, I have with me Bhaskar Lakshminarayan, the Chief Investment Officer and Head Investment Management at Bank Julius Baer in Asia Pacific. Bhaskar, thank you very much indeed for sparing time for us. I went through your street cred, your past positions. You've been distributing a lot of money or investing a lot of money for investors, pension funds. So, from that point of view, I want to ask you, 12 in a row, as it is, India was considered rich in valuations. Would you invest now incrementally?
Thank you. I'm very happy to be here. And, I would say, like you did say it, valuations is a headwind. This is something that everybody has to acknowledge at some point or the other. The growth story is great. I think everybody understands the growth story in India, the structural nature of it. All of that is well understood. I think it's all about a question of how much do you want to pay for it. And what's also beginning to happen is you're beginning to see a fair amount of activity globally, where you're at least not possibly getting the same growth rates, but you're sort of getting something on an adjusted basis, but where you're playing much, much lower. So I think it's also what's available as alternates to global investors. From a global point of view, it's getting more and more difficult to catch this runaway trade.
Difficult to make a case for India, you mean?
Yes, in India, absolutely. Because, it's not stopping. Like you said, you had now 12 successive days of up. It's possibly going to be the 13th. And it's not that even when the pause came, it was of any long nature. So I think people are not able to buy a correction.
No, but, the MSCI EM index has an India weightage of almost 20%, 19 something, right? The passive funds obviously give 19% of their money. How much do you think active funds give? The sense we get is it is much less. At some point, the reckoning has to come.
This is the thing. And what's also surprising in that sense of the word is almost everybody that we're talking about on the active side is underweight China, right? So if I look at it from that perspective, India should not only get market weight, but should get above market weight. So you're right. There is an impending flow argument from foreigners, but I think it's just a question of, like I said, when things are moving so fast, it's about when do you jump on the bandwagon.
Okay. But where would they be putting money if they're underweight in India, underweight compared to India's MSCI weight, and underweight China? Where is the money going? What are the
So I think what's happened is a lot of people have become APAC as against just MSCI Asia ex Japan. So Australia has been a big receiver of money to some extent. Korea has been, again, a favored. So is Taiwan. The whole AI space has made the Taiwan quite an attractive market to be in. So I think that's where much of the money has gone. And then the value plays in places like Hong Kong and Singapore are extremely attractive, with many of them trading below book, which is not a terminology I think you can use in India for almost anybody. And I think on single-digit PEs. So I think that's what's making the allocation go towards those directions. I think valuation is the only real headwind that I can see as what is stopping a greater allocation to India.
Okay. No, I agree with you. Just now we were discussing the Bajaj Housing Finance Company, and price to book is over 3 times. And comparable companies are, at almost 1.5 to 2. So really, it is expensive versus more expensive that we are debating over here. Under 1, I guess, almost non-existent, not even PSU banks. Okay, on that note, let me ask you your 3 best investments globally today and your 3 best investments in India, if you were to put money.
So unfortunately, I can't give you individual names, but, I will tell you this, in terms of globally, we are still very favored towards, I would say, the Mag 7s. So that's possibly the best place to be from a global investor's point of view. When people allocate a large amount of money, that's still where bulk of the money is still
This
going.
level? At this level, Magnificent. 1 minute, Bhaskar, at this price, you still prefer the Magnificent 7?
Because if you look at the valuations even now, they are. I mean, if you talk about valuations, right, they are still overall acceptable in many ways. They are not like, they're not like out of range, or they're not at peak levels, or they're not like bubble valuations in many respects. And there is still a fair amount of growth which justifies the pricing. Absolutely, yes.
Okay, got it. Sorry, I interrupted you. I was asking you your top 3 investment destinations today, outside India and in India.
In India, what I would buy today is definitely all of the large. I mean, I think the large caps. I would just stick to the large caps. I think they have not done as well. They have been tried and tested through every cycle possible. And I think the BFSI segment is actually looking very, very nice. Yes, there are some NBFCs which are very expensive, but I think the traditional banks look a lot nicer and cheaper and more properly valued. Especially if you believe in this growth story in India, banks will have to be beneficiaries. So I think that's the place I would really focus on. And despite the fact that consumer discretionary is expensive, I will still buy them.
Okay, that's as close to giving us a name as you can, probably. What about the EMS companies? They're not quite consumer durable, but we just had Kaynes on the channel, and yesterday we had Dixon on the channel, and India has big ambitions in this space. Do you watch them?
Yes, I would. I would participate in them. I would definitely have them as an allocation in the portfolio. How much would be a question of, again, pricing and how quickly, how much you believe in these growth rates. Because one of the things when it comes to this segment is about execution. You just talked about Kaynes, but it's all about execution. So I guess we need to be careful about potential versus execution.
Okay. Would you look at other spaces like near equity, or not exactly non-equity, but near equities like REITs or proper real estate financing? There are a lot of AIFs who are doing it. Any of these near equity asset classes?
I've dealt with REITs for a very, very long time. Globally, it's the most misunderstood asset class in the world. So I would say I want to actually be very supportive for REITs in India as well. But I know that we are looking at a place where we need some sort of a yield play, and I know that REITs possibly are the ones that will fit in there. But it all depends on how. I know it's a very complicated structure as to how it gets paid out. Return of capital, dividend, interest income. So it's all about taxability and the net income you finally make. So it is a fairly complex subject, but I am supportive of REITs.
Okay. Now, in short, is India getting it right?
No, I think it's a little. I would say you can simplify the REIT structure a lot more, and possibly provide a certain kind of tax structure around them, which will make significant inroads into how people will look at infrastructure investment.
Okay. No, well, I think we must get together both on and off cam to, get this subject right. A serious discussion on this is something the policymakers will appreciate and will perhaps take cues from. But that for another day, because the more pressing thing is the data we are going to get on Friday from the United States. How crucial is the non-farm payroll? Can it derail this 2-3 week long rally?
No, I don't think. I think even if it's a bit soft, I think that's been well off. What it will lead into is a question of, does the Fed cut 50 basis points instead of 25 as the base case? And I think that's what the dialogue will tend towards. So I don't think a slightly softer number necessarily derails the current thinking or the current market action that you're seeing. So we are still very, very pro markets. We do believe that you could get some consolidation, but those consolidations are actually buying opportunities. So absolutely, I think we are. Look, the bull run in the US, which is a global bull run, if you were to say, started in October 22, and this is not stopping.
Okay. So your base case is a soft landing, and how many Fed cuts in the current year or in the next 12 months?
We are a lot more conservative in terms of Fed rate cuts. We have about 1 or 2 for this year, depending on how they will orchestrate the September one. And then we have about 3 for next year.
Okay, so clearly you're betting on the soft landing and on the economy being fairly robust. Okay, point taken.
The economy is very robust. Yes.
Yes. No, I mean, I take your point. There are many people on that side of the fence saying that it's too robust and to expect 4 cuts and 5 cuts this year is it's certainly no case for it.
But the economy is running the way it is. We don't stop it overnight either. So.
Fair point. Okay, let me just wind up by asking you a question on India debt. I mean, it got included in the index. The macros are improving in terms of inflation, growth, current account deficit less than 1. I can't remember when I reported current account deficit less than 1. Fiscal deficit declining. Is this bond rally secure? Is it likely to continue? And do you see it crowned with a rating upgrade sometime soon?
So, the upgrade is possibly the thing to look out for. But I would say as a bond rally, again, you have the same issue with bonds in India as you have with equities. They're getting fairly expensive very quickly. The taxation doesn't help. So I think I'm possibly, if you ask me to pick between equities and bonds in India, I would pick equities.
Okay, well, the money is talking a different language. We're getting hand over fist bond funds in. But I guess the equity, as you said, as we discussed earlier, it's still waiting on the sidelines and it may have to buy expensive going by the way things are. Thank you very much. Bhaskar, it was a pleasure. Thank you so much for spending time with us and we hope to have you as a regular on the channel.
Thank you so much. Look forward to it.
Okay, well, that's the word coming in from Julius Baer, Bank Julius Baer, and clearly bullish on India, but worried about valuations. We wrap up on that note on Bazaar. Chartbusters is coming up after a very short break.